Hey, everybody. Welcome to the Pit Trading Show. Your host, Jake here. And today we have a special guest, Mike Pisani. And he will be talking about the markets. He'll be talking about options. He's also known as Options Mike on Twitter. So really looking forward to having Mike on. We are going to be doing a little bit of everything. So segment one is going to be with Mike, kind of how he's navigating the market right now. Segment two is really going to be about how we are finding an edge in the market right now. And, it's hard, not only just finding an edge, but then being able to mentally make the trade with the volatility right now. We're also going to look at the broad markets to see how they're doing, as well as looking at the top weekend charts requested. And we've got Boeing, Zoom, and Tesla. So, Mike, thank you so much for joining. And what a I was going to say week, but it might as well month at this point.
Hey Jake, nice to be on. Nice to be here with your audience. Is it the month over yet? Because I don't know about you guys, but I'm brain dead.
Uh, I wish 2021 started in April at this point, but just get this year over with. But yeah, no, it's been a rough one.
The good news is this is not a financial crisis yet. This is something that we can come out of at the other end of this. This is not the end of the world, but it's going to take time. And everybody that expects this to turn around tomorrow, the next day, or a week from now, you kind of need to just settle in and say, I need to just be patient and wait. And that's the tough part, right?
Yes, yeah, no, I mean that's hard for me. I think that's hard for a lot of people, and that's what's really causing, this whole what do we do? Because unfortunately, the only way to really tame this is to have complete kind of the entire country has to do the same thing. It just seems like we're not exactly there yet. And so once that happens, I think then we'll be able to make a next step forward. But it's been interesting to see some of these videos and some of these different things over the weekend. Just seeing people are still kind of not doing the social distance thing, and it'll be interesting to see what kind of happens this week and what's enforced and all that. But I do think we are getting closer to kind of realizing that this is a bigger issue than we thought 2 weeks ago.
I went to my local supermarket on Saturday morning. They opened at 7. I got there a couple minutes beforehand. There was a line of about 60 or 70 people all piled up together to get in. And I'm like, me and about 4 of the people are sitting in our cars. I'm like, I'm not getting in that. I'll wait till they all get inside, then I'll go in.
Well, see, that's kind of the problem is these lines. You're clear, you see all these lines on the news, and it's like this is clearly not following the whole social distancing thing, and you know, we'll just see kind of what happens over the next week. It's really been literally you got to take it week by week, and trading has been just absolutely crazy. It reminds me of 2008 all over again, and some of the company, it's not just the banks, it's pretty much everything. I mean, somebody sent me a chart of Dave and Buster's the other day.
Play.
Oh my gosh. Wow. Talk about just tanking. And that's the airlines. It's just across the board. So it's just really kind of like,
There are pockets of strength out there, though, that are not just biotech. There are names out there that are still holding up better than the market, and that's where you need to focus for longs.
yep.
And that's what people forget. It's you have to look for the names that are acting better and forget these. Every day you see like Play. I think on Friday had a huge bounce, right?
Mm,
Somebody brought back up the buyout rumor that's on them, or somebody trying to buy them out, and the thing took off. But those aren't the names you want to be chasing after. You want to be looking at the names that are showing relative strength compared to their index. Those are the names you want to focus on. And to give you an idea, Crowd, I love Crowd, love the name, heavily underwater on it because I bought it up in the 60s. But look at that earnings report on Thursday. Beat, and in this market, they raised their guidance. Now, that doesn't mean that name's not going to come back down after a huge gain, but you want to look for names like that because when this is over, those are the names they're going to come back to. Those are the names that will outperform, not the names that are cutting guidance or sitting here we don't know or saying, yeah, I know everybody says, oh, the airlines are screaming opportunity here. Yep, they are, but that doesn't mean they're going to bounce all the way back. They're going to get a bounce, but
yeah. Yeah. I mean, I think Delta, I mean, the range on that on Friday was like 30%, I think. Uh,
It was insane.
it was mind blowing. It just reminds me back like when your XL Capitals and your Genworth Financials back in 2008 were just absolutely going like that. And those were the ones I was trading back in the day. It's just absolutely nuts.
Oh, look at Nvidia. It's moving like 20 to 30 bucks a day.
Yeah.
You could trade 20 shares and make 500 bucks on that thing.
Well, see, that's one thing I want to bring up with you. You know, you're known as Options Mike, but at this point in time, it's almost better to play the common stock because the options are so high.
I've been pounding all week the TQQQs and the SQQQs. They're triple leveraged funds for the QQQs, for the
Yeah.
Qs, and I've been playing it with anywhere from 1,000 to 100 shares. And what I usually do is one big trade on the open when I feel really confident in the direction. I
Uh-huh.
make anywhere from a couple hundred to 800 bucks on it. Blow out, even if it goes higher, I don't feel bad, and then I start pounding it again with 200 or 300 or 100 shares.
Hmm.
And that 100 shares allows me to stick with it when it goes down 60, 80, a buck real quick, right? On these volatile drops. If I had 1,000 shares and I was down a buck, I'd be sitting there, clenching my butt cheeks going, oh crap, what just happened?
Yep.
So, I mean, that's part of this market is you don't need size. You can make money.
Mhm.
And what I try to tell everybody is, right now you're not trying to win big. If you win big, fabulous. And I know some people have had some people in my service have made tremendous money but they take risk. But you can make money day trading on small size and keep your risks down. And that's really what it's about. It's surviving until we get that opportunity to really just say, I'm going to go long, real long here.
I'm right there with you. I got really lucky. I'm not sure what happened there, but I ended up taking out. I made some good profits this year. Took it out and just playing with the money that I wanted to play with, and I've gotten creamed because I'm a swing trader. And, generally holding overnight is okay. And, the market we've been in the last year. And, one day literally can be a move of 10% plus minus, or like just the full move of the day. And it's just, I mean, intraday moves um, are great. But if you're trading options and these premiums are already so high, what do you say to people who are kind of trading those? And is it even worth trading those, or is it better off to just play the common stock?
I'm using both, but mostly stock. When I want to short something, so if I want, like I shorted Boeing this week, I made a little bit of nice money on that, but
Uh,
I'm not going to short Boeing with stock. So my mentality is if I want to short something, I use an ETF where I can go long it. Well, I used
Okay.
to use VXX or that. But if I want to short a name, I'm going to take puts. I've been playing options on Apple and occasionally on Netflix. What I'm looking for are names I'm looking for where there's good amount of volume, and liquidity in those names, and where the spreads aren't ridiculous. When I see a spread, if I'm looking to play an option that's it's $2 and the spread is $2, I don't want anything to do with it, right? Because that's the market maker's dream, right? I'm going to make you pay up to get in here and pay up to get out, and if it goes against you, you're really going to pay.
Yep.
um,
Absolutely.
so you can, but you have to be careful. And the other thing everybody has to be aware of, and Friday was a great example of this, is Friday was a weird day. The VIX kept coming in while the market kept kind of drifting down. It was one of those days where we saw weird action and that maybe a little bit of hope, right? That maybe some fear might be starting to come out of this market.
Yep.
But a lot of people were saying I'm getting killed on my options because the stock's not moving it. But it was also because as the VIX drops, implied volatility drops in your options. So the further you are in the money, the less chance, even if it's moving up, the less chance you have of working. So you kind of have to play that game right here where you have to say, if I'm going to go out of the money, I don't want to go too far because if the market really starts to go and the VIX drops, the options are going to drop as well, even though the stock's going up. It's not easy right now. This is very, very tough for an option player. Spreads
Yeah.
work better.
Yeah. I was I was just playing around with some Baba, and I was just trading Baba on Friday, and this is a case study I'm going to go over today. But anyways, the price of Baba really did not move at all. Maybe it went from 187 to 185. It was still up 4 to 5%. But The options contracts I were in, it was one of them was 195 and a half for next Friday's expiration, and then April 17th for 200. And they literally just absolutely tanked out of nowhere. And, that it was just those crazy kind of Greeks moving around, and, just it was unbelievable to watch. And as soon as they dropped, they went right back up to what they were. And it was kind of fascinating to watch. So, yeah, I haven't traded options that long. I've mostly always traded common stock. So, this is my
Can't
first.
go wrong with stock because it comes back. It can come back. Where options, if it gets down, it may not come back. Even if it gets back to where you bought it, you're still going to be down on the options trade.
Yep, gotta love when the price goes from 155 to 160. Your options are up, goes back to 155, goes back to 160, and you're down 75% somehow.
Yeah.
So, that's always a fun game to learn.
By the
Um,
way, futures just opened down 4%. So
cool.
we're heading for a limit down already tonight.
Yeah, unfortunately, whew, yeah, that's gonna be. Yeah, I don't see this week being great. And as you guys saw in the disclaimer, anything that we talk about is really not any type of advice. This is just simply our opinions. This is kind of unprecedented as far as just. I mean, how many limits have we have? I mean, even up and down, we've had at least like two limit ups at one point in futures, right? Or no?
Yeah. It seems like I think Friday was the first day all week we didn't hit a limit in one direction or the other as we came in, and it's tough because part of me, I've been trading since just after 2008, full, in the markets, and I think this has become a game. If you watch these moves, it looks like they purposely gun for those limits overnight when they
Mhm.
want them, right? They go for them, they hit it, and then they know they can hit the circuit breaker easily later on the next day. It's at 7%, and this is kind of becoming a game right now with the futures market, and it's making it even tougher on most of us who don't trade overnight. Most of us don't trade futures contracts. We trade, I'll trade pre-hours and after hours on specific names when I see the move there, but mostly I trade, between 9:30 and 4. That's the
Mhm.
majority of my tradings at. So, it's not easy. If you're a futures trader, this is a lot of fun. That said, eventually these guys are going to get crushed when the big guys suddenly said they've had enough. And I think that's the big thing everybody has to look for in this market is when there's two ways this market turns, right? The first is it's a combination of the stimulus package which Congress is working on, but also it's really getting the curve to flatten, right, and start to curve. When the market thinks that this is starting to phase out, pan out, and be done, and we're moving towards back to a more normalized life, the
Mhm.
markets are going to front run that. Or when stocks get so cheap that the big guys just can't help themselves and start buying. And that's when they're going to drill these futures guys, right? They're going to catch them one night when they're trying to short the hell out of everything. We've seen this before. We're going to be down about 5%, and then we're going to limit up, and they're going to keep screaming at the open and trap everybody
Mhm.
because they're going to say, we want the market here. And we just as of Friday's close haven't hit that spot yet.
Yeah, there's a few charts that I wanted to go over that kind of go over that. So, I will go ahead and start sharing a couple. And I was going to say, do you want to go ahead and share your screen as well if you have a couple things to go
Sure.
over with your last comment there on looking left on the charts?
Yeah. So let me pull up my chart. And, I have this chart up here of the SPY, so you guys can see this, and hopefully it's up there. And you can see this. I mean, this huge, huge fall. But I always say to everybody, if you don't think you can go lower, look left. And for most of the time, that's going to be true, right? Because to the left shows you the history of that chart. And anybody saying that the SPY can't go lower, well, look left, right? And what I see here is when I look at this weekly chart is you have this huge down move, right? This precipitous fall right into this 228 area that we're in right now. And you're in a very low volume area here. And now that we took out and we breached, what we did on Friday into the close is we breached the weekly low. We took that out. We breached and it closed below for the first time the 2018 low at 233 area. And now we've opened the door down to this, right into here, into this between 215, I'm going to go look lower. I like the 212 because that's where we broke out. We flat, you see that tabletop flat there before we broke out.
Mhm.
And, but look at the volume between that 215 and all the way down to 200. That is now the magnet for this market, right? If this market wants to continue to go down, you look at the volume here, that's where it's probably likely to find its footing for a while, at least temporarily if it gets down there. And that's a combination of the volume. But the volume, I love volume profiles, but all it really does is it points to how long we consolidate in that area, right? You had a tremendous amount of trades that went off in this area for
Yep.
better part of a year and a half. We kind of traded around. So there's telling you there's a lot of people that own this down here, and they're probably going to defend it down there at that point. Doesn't say we can't go lower, but that's the area I would start looking for. And that's, that to me is the likely area this market starts to find its footing. Whether it's quickly tonight, overnight, in a night or two, because the stimulus package gets passed and it bounces, or we shut this country down for 4 weeks and try to get our hands on top of this. But these are the things the market's looking for. And to me specifically, when I look at this chart, that's kind of where we're heading.
Yeah, no, I wish I could say something more optimistic, but yeah, no, I mean, it's just kind of like a magnet. Like that area below is just really where you're going to have people stop taking, any profits they have, because from this point at around 210 to 215, most of the people from that tabletop area in the 2015 2016 area were up almost 60%.
They're
So
gone.
so it's like, as soon as enough people realize that this is a bigger deal than it is, I wanted to actually ask you about do you think baby boomers are adding to the selling here because they're just like, hey, I may not get my return within 5 years. I'm just getting out liquidating. Do you think that's something that's happening, or do you think this is more of just complete panic across the board?
I think it's complete panic. I don't think we've seen panic. I think that's the problem, to be
Yeah.
honest with you, Jake. We've seen a as bad and as fast as this has been down, it's been very orderly. You haven't seen those big flushes yet, right? That you haven't seen that, maybe on Wednesday, that move to 233, that first move below there on Wednesday when Trump was speaking and then Ackman was on CNBC at the same time, feeding fuel into that. You saw a panic move there, but I think overall people they're just selling. There's just no buyers here. There's nobody to buy it up. And the other thing I'm watching, we saw our first fund blow up on Friday, right? The first hedge fund we saw blow up there. They just absolutely imploded. They were heavily short the VIX, and that was it. They finally got killed.
Oh
And when
man.
there's one, there's three, right? So
I was gonna say, I mean, this is kind of the next chapter in a crisis where, people are panicking because of the virus. Now, all of a sudden is the next step of this where you start to see these funds blowing up one after another day by day, oil companies going bankrupt. Is that kind of the next chapter here, or do you think the government kind of has enough ammunition to allow that to not happen for at least a couple months?
well. By the way, we hit our limit down for the night, so futures are halted.
Oh,
In the first 10 minutes, 20 minutes of the night. So we'll put that. So I think we got two black swan events that came into this market in the same time, and that's not happened before, right? The coronavirus is a true black swan event and how this is playing out. We could
mhm.
argue that the Western world didn't react when they had the chance and wasted opportunities. But it's hitting and it's going to hit hard. And then you had this whole oil war that came out of nowhere that everybody was thinking that, of course, OPEC and Russia are going to cut because they're getting killed. And instead, they decided to go into a full-on trade oil war, and that's going to just cream the American shale companies.
Yeah.
And banks have exposure to that, and there's some have more than less, but you're going to look at a lot of defaults. Now, these companies that are going to default are going to get bought up by the bigger companies, but we're also seeing part of oil going on here is you're seeing a move to cleaner energies that's starting to take place too. So there's a
Mm.
lot going on here right now, but you have two black swan events hitting the market simultaneously. And so yeah, the banks are going to get hit, but the banks are not what they were in 2008. They have reserves right now. They're strong. You know, you, you look at names like the JP Morgans of the world and you know, as much as they've been beaten up, you know, and they have. This is still one of the best banks out there, and if I was gonna buy a bank at the end of this is the one I would be go running for at this point. Um,
Yeah, I've had a couple people tell me that that's one that they would have interest in. I mean, it's been around for so long. This is kind of unprecedented, but well, not always, but generally these ones that have been around for a while have learned to survive through even the craziest times.
well, they also make a lot. They have great reserves. They also make a lot of money off their trading, and some of these banks have done very well in the last month or so on the volatility. They saw this coming. But yeah, anytime anybody says to me we can't go lower, I encourage you always to look left on your chart because for most of these companies, there's a lot of room to go lower. Not all, but most.
Well, what's interesting is Apple.
Mhm.
That's something that really, if you look at the 2018 kind of low there. Oh,
Yeah,
what happened there?
there you go.
What do you need from me? My chart? Okay. I guess I'll take over then. Um, Let me share my screen though, so Mike can see it as well and follow along. And then I'll go here. All right. So if we go to Apple, can you see my screen?
Yep.
Good. All right, cool. So, going back to Apple and going to the monthly chart here, it's kind of crazy because, the what's really interesting is I don't know if I'm just overthinking this, but it's really been interesting to see that the S&P 500 at times has been lower than tech and the Nasdaq, and you really, this more of like, because tech can respond quicker than some of these S&P 500 companies. What do you think about that perspective? Because I mean, from here, or are they just lagging the market and they're the ones that take the next leg down?
Well, I have two thoughts on this. One is that when you get complete capitulation, even the strong names eventually give in and come in, right?
Mhm.
So when you look at tech, which has been holding up better, but I think it's also a sign of the times and how the world has evolved. And what I keep thinking to myself is the underlying story for names like Apple hasn't changed. At the end of the day, when this is over, whether it's a month or 3 months or 5 months from now, people are going to buy their phones. They're still going to buy their Apple software. They're going to buy their earplugs and stuff.
Yep.
And Apple, which has the power to sustain themselves through this, is going to get the same sales they had moving forward, especially as people come out of this, because people are still going to need phones. You're not talking about buying a high priced item. Now, maybe they'll sell more cheaper phones than they sell their higher priced phones. That might be part of it. But I think what you're looking at here is this: the world has evolved into a very technological place. And a lot of these names, and I think Apple's one of them. And if you look on a daily chart, it's holding in much better than the Qs. It finally lost the 200 day this week, but it's been clinging to it forever. All right. And you can see it's just been on there clinging to that 200 day. The 200 days up around, it's up about $20 above here. But Friday, it really kind of capitulated on it. But it's been holding in and been really just holding strong. And now it's coming into a big volume place. And if you look down just a little lower here around that 220 area, it's got huge volume on that volume profile that's coming into there. And you see that just coming in. And boy, you can see there that's just going to, that's going to provide a lot of support for Apple. And even
Yep.
though it's down, what's changed there? Names like Microsoft, cloud, what's really changed? People still need their software.
Yep.
People still are going to need these services at the end of this, the cloud computing. So, you know, I see these things as staying strong. What I do see hurting is the consumer sentiment is going to get shattered here with all the people that are going to be laid off or furloughed. And um, most of these people, they're going to get their jobs back at some point, but it's going to be slow, especially in the service industry. I mean, I don't know about you. How quick are you going to want to be to get on a plane and go on vacation to a hotel or someplace in that, or go to Vegas and go gambling casino with people around? I mean, these are things that are going to come back, but it's going to take a little bit. So I look at tech and I think companies are going to start buying again, especially services and cloud computing and software. This isn't going anywhere. This is This is the new part of our economy. This is the strong piece of it.
Yep.
So this is where I'm focused on mostly, and the chip makers.
You want to see an interesting chart that because I'm a huge fan of the anchored volume by price. As you can see here, we're kind of finding some support here, and based on futures, this may not be the case tomorrow. One thing I want to mention, a couple things. One, you've got this volume gap below that you mentioned before. There's just not a lot of people holding here, and so that adds. It's kind of like the more shares held somewhere, the more friction, because the more participants you have to go through to get to the next level of supply or demand. Well, here when you've got this gap, it's very easy for the price to drop until you get to another one of these like volume shelves, is what I call them. And one example of this that didn't work out so well was Boeing, that absolutely blasted through even the weekly, or this may be even the monthly at this point. Uh,
That's just hideous.
yeah, ooh, yeah, so much for and it's really interesting to see, like, in theory, this technically would be very hard to happen, but when you have almost a possible credit crisis going on, especially with Boeing, who's gotten just rocked with multiple things. It's easy for the price to just go through these levels like kind of like a hot knife through butter, and then your next level is really down here at 70, 80 to 70 area.
Which is not far at this point.
Yeah, I mean, you already went down all the way to 89. You might as well.
And this stock is moving. I'm a big fan of the ATR because it shows you the average true range of the stock on a daily basis. This stock's moving almost $20 a day at a $100 stock. That's nuts.
Yeah, it's I mean, but if you look at the longer term chart and kind of look left as you've mentioned here, it's really interesting to see that these kind of moves in Boeing aren't really out of the ordinary. These, especially let's say when September 11th happened, you saw Boeing go
Yep.
from a high of 51 all the way down to a low of 27. From being at a high of 71. So this is definitely extreme, but we're not done with the month yet. We've still got a full week left. Do we have one of these where we get a big wick into the end of the week and almost come right back to this equilibrium volume area? You know, it it
I've been trying to. I do think when this market decides to bounce, we're going to get a vicious, vicious bounce, right? You think about the liquidity that the Fed is pumping in on a daily basis right now. $1 trillion a day. $1 billion a day. Are you kidding me? $1 billion a day being pumped into liquidity into this market. I would caution everybody and say this: this is not going to be a V bottom. Everybody's used to these big V bottoms in this market where we come out of it. What you want to look for in this market is, first of all, when that bounce comes, you want to participate in it, you take it, and then you watch for it to come up, and then eventually it's going to roll over and probably put in a higher low, and that's when you want to get involved in this market. And to be honest with you, a name like Boeing, sure, it could bounce, but what reason it has to bounce? I mean, this year has been. I mean, what a year for Boeing. I mean, between the crashes and the Max and now this, and now they just took $13.8 billion in loans, and they told the government they need 60 billion more. I mean, just put that in perspective. I mean, that's huge. They're gonna get bailed out because they have huge military contracts, right? So they're not going anywhere. And
Mhm.
at the end of the day, Boeing's a buying opportunity, but just don't expect it to bounce back to 400. Expect this thing maybe to get back up to the 150, 200 at some time in the near future, and then see what it does at that point. Um, yeah, we could see a bounce if the government comes in and bails it out this week. That would probably light the fuse, right? If the government announced they were giving Boeing $60 billion, depending upon the terms, that could be a fuse for a big wick this week. I could also say this just as easily say it goes all the way down to that 80 area
Yep.
and sits there.
It's a big shelf of volume, that's for sure. What's really interesting about this monthly chart is the fact that we literally are still in an uptrend from the 90s, even if we even if we crash down to 45, and missed this by a little bit, you're still in an uptrend. And
Isn't that scary?
yeah, and I think it just kind of goes to, show how overpriced and how inflated Boeing was at the top. And you know, you've got this middle finger setup, which is one of my favorites. That kind of he told us, hey, market cannot decide on what's going to happen here, and it was just a 1-2 punch. So it is interesting to see that we are bouncing off this VWAP that I anchored from November of 1987. Even if we anchored the volume profile from 1987, we can still see that there is a lot of people holding shares holding in this area from 76 to 35. It's kind of like if you jumped in the what is it, the sea that's really salty, the Dead Sea. It's
Oh
kind of
yeah.
it's kind of like jumping into the Dead Sea. This is kind of like the Dead Sea. There's so much volume holding here. No matter how hard the price kind of goes down here, it's probably gonna, like Mike said, just kind of bounce right back to the surface, if you will, which is right around the top of this area in the 90s. But when there's mass liquidation and when there's just absolutely no way to stop the bleeding because people are just getting margin calls, you can see these big moves down even further to the trend line. So we'll definitely keep an eye on this one. It'll be interesting to see if we do get that little bounce back up to the 120s if something comes out. But I mean, even the bailout bill seems to be having problems now between different parties. So is that going to be an issue?
Of course it is. I mean, come on. I mean, I hate to say it. My so a good friend of mine had been talking for the last year and a half about how bad partisan politics have gotten in this country for the last 5 or 6 years plus. And we said, it's going to take a big September 11th like event, in quotes, to get the sides to work together. Well, here it is, and they're still kind of going at it, right? At the end of the day, they're gonna come together because they have to. Because at the end of the day, the average American is hurting badly, and it's going to be hurting badly. They're going to have to do something, and whatever the cost is down the road is kind of irrelevant to this country at this point because you have to make sure that you help everybody out and you make sure everything's good. But yeah, they're going to squabble. They're going to go at it today. They're going to go at it tomorrow. But I expect this week something gets done. I'm not sure that's enough to lift the markets. It might be a short term thing, but you know, if you start seeing people on hospital beds on the street in New York City, or people getting turned away, or you start seeing what's going on in Italy over here, the markets are going to react to that. And I think you need to see this curve flatten out. And I applaud the governors who have stepped up and they're taking that effort to try to stop this. New York, New Jersey, California, Illinois, Ohio, Louisiana. Now, all these states are basically locking everybody down, telling everybody stay home.
Mhm.
And maybe it's time we stop air travel. The military can get stuff around for this country that needs to be. Maybe it's time we just tell everybody we're going to take the hit. The world, maybe the world should just say we're going to take a month and try to get this shut down. Because the faster we do that, the faster we can get on. Unless there's news we don't know about that they feel like even then it's just going to come right back. Maybe
Yeah.
that's part of it. We don't know. Maybe we're not hearing that yet.
Yeah, no, and that's kind of what worries me is, what's really interesting about this is I'm not I just remember it was Thursday, I think the 18th or the 19th of February, and you had that initial big drop intraday, and nobody knew what caused it. And then that was really kind of the drop heard around the world, if you will, because that is really kind of what started this. And the reason why this is kind of interesting is because I have my mentor kind of that taught me entrepreneurship and taught me just about business and that type of thing. He was my best friend's dad, and so I'm now teaching his son about the markets. And I remember that day he was like, "Yeah, why did the market just drop 1% randomly?" And he's like, "Yeah, I asked my professor, and my professor didn't know either." And I'm just always going to remember that as the start of kind of move. Is there like something that you saw that you were just like, oh, this is kind of the start?
Yeah, well, go back. Can you go to a daily chart of the SPY?
Hmm.
And can you bring up the last couple years on a daily chart? If not, go to a weekly. We can make it work.
Should be able to do the daily.
So, okay, stop right there. Take the breakout. So you look where we broke out back in October above that double top there, and then
Hmm.
that long run we had up to where we are now,
Yep.
right? And if you look at that and go back in time, look at some of the other moves we had like that. Go back to the breakout from there, about half your chart, that run right there, and then the last run. There's a lot of symmetry there. I'm not a fib guy, so but I look at a chart right now. I looked at a chart and I said I don't have to look. I don't have to do Fibonacci's to see. Like you see that there, and then go back all the way back a couple more years, back to 2017 and to 18. You see that run right there.
Yep.
So, look at those runs, right? There's a lot of symmetry between those and what we just had here in some respects. So, I kept telling everybody this market is very, very overdue for some type of pullback or corrective activity as we came into this area. And I was in almost mostly cash. And I've been telling my subscribers to be extra careful during that time period. Now, I didn't know this. I will be the first to tell you. I thought the coronavirus was a China problem until it got to South Korea. At that point, I changed my tune. When it got into a westernized culture, I was like, this isn't good. Because if it's there, it's going to be if it's there, it's going to be all over the world before we know it. So when that first hit came, uh, I didn't know, and I thought we'd bounce. I thought we were going to get a dip. I thought we are going to get a typical maybe 5 or 10% pullback into the markets at that point. I did not see this coming. I thought ultimately we would, if we got to it, the 200-day would hold. We went right through it. This is fear. This is, and again, the market hates one thing more than anything, and that word is uncertainty. And right now, it has no clue as to what's going to happen or when this is going to be over, and that's what's driving this event. And it's very simple because, truthfully, if this is over, say June, and I'm not saying it is, I'm just throwing a date out at random by saying it's over in June. It wouldn't be surprised to me. Anybody, we're in a recession. Nobody wants to talk about it. We're in a global recession right now, and but we could be out of this in months because if this is cured and this disappears, then the economy is going to quickly start reverting back to where it was around the world.
Hmm.
But the right now the markets can't see that because it doesn't see a path to that, and that's what it needs to see. It needs that uncertainty to dissipate. And you look at the numbers coming out, and I follow the coronavirus, every day, and I track it. In New York, 15,000 cases now today. New Jersey, almost 2,000 cases. You know,
Hmm.
you have around 30,000 cases in the United States, and almost half of them are New York, New Jersey. That's troubling. And you look at Italy, almost 50,000 cases, and they have over 4,000 deaths, now passing China. That's a problem. So to me, this market will come around. It'll come around when it thinks it's starting to see light at the end of the tunnel, which will probably before we all see it, and watch for it. It'll start to get that bounce and it'll come out of there. But
What
here, go ahead.
I mean, if you look at the weekly here, you can see, we really haven't touched this anchored VWAP from the 2009 bottom since 2011. I mean, we were really overextended. Um, do you think that's adding to the fuel to the fire? I mean, it's just making it so easy for people to sell because a lot of people own shares from the early 2010s, and they're like, well, still up X%. Do you think those are the ones that are also fueling the fire because even they are like, yeah, okay, maybe I'm going to take my profit now while I still have profit?
Let's put it this way: if you're a big fund like BlackRock or Goldman Sachs, you think you're still selling here for the most part? Or do you think these are hedge funds and retail people like us and people who want to retire are selling? And these big funds are got to be looking here right now going, where do we start buying? They're not looking to they've done most of their selling. Not that they're still not selling some things, but they're looking into where do we start buying?
Mhm.
And that I think you have to start thinking like that. Where do I start buying? Where are they going to start buying and watch for signs of it? Because I guarantee you these guys are circling the wagons right now going, we could make a lot of money if we can get back, even if we get 75% back to the all-time highs by the end of the year on some type of wicked bounce. we can make a lot of money on that here. That's a big, big, big move back up in the markets.
Yep.
Uh, the one thing that will also show you the signs of a bottom is when the candles start to get smaller again. These big volatile moves go from these wide range candles, these 7% moves a day, and we start seeing these back into these 2 to 3% moves a day. We'll start showing you that this market is starting to find a bottom. That means that the sellers are gone, and we're just having churn as everybody tries to flatten out, right? Whether you're short, you're closing out. Some longs are starting to buy in. You start seeing that, but these moves right now tell me, like Friday's move, there's further downside. Even if we gap up tomorrow for some god unknown reason, I know we're at limit down, but the one thing this market loves to do is close on the highs or lows and goes the opposite direction the next morning. You go to sleep thinking you're going to gap down, you wake up and you're up.
Yeah, no, it's at there there was a point though where futures were actually following the next day. It was crazy. Like a lot of the time people are like, "Oh, just do the opposite of futures." And at this point, it's really had follow through. And one thing I wanted to point out here is I've got the Bollinger Bands up. I got the daily price action, but then I have the Bollinger Bands from the monthly chart. And you can see, I mean, this was the bottoming point where where we had in 2018, and we're just really kind of we just had literally an upper to lower band move on the monthly bands. And, is that going to eventually be an area where we find a bottom? This was the case in 2016. And so, from a relatively, speaking standpoint, we're really kind of just entering that part of the extremes, I guess, that we were back in, 2015, 2016. So, is this just a function of how over, just how much, like, just, I guess we kind of had a melt up. Is this just kind of a meltdown at this point?
I don't know. How about a bungee jump off a cliff down?
Yeah.
Without the spring back so far? Um,
Falls at this point. So, I don't know what the futures are still doing, but this anytime you've got this type of candle, it's really hard to, especially over the weekend recently, it's really hard to get any type of reversal because there's just so much pent up news that needs to be priced into the markets, and a lot of that, almost all of it, is negative.
Again, I know I keep saying this, I sound like a broken record, and, the one thing about markets like this from my years of trading, I'll tell you is, and I hate saying because 'cause I'm a big technical guy, but
Hmm.
you kinda gotta throw technicals out of the way here to a certain extent. You can look at them for guides and look for areas where you can find support and resistance, but realistically, this market's not trading on technicals right now, it's trading on uncertainty and fear.
Yep.
And so, you can look at this and you can say, well, we're not going here. But, you look at this and I say to them, yeah, we could start to find a footing here. I see you bring it up into the chart. Um, the cues, right? It's a great look, by the way. Look at that long-term trend that's coming into,
Yep.
right?
I mean, this is make or break time.
Yeah. And again, this has been holding in better. Can you bring up a daily chart of the VIX? And
Yes.
bring that. I'm sorry, I've talked about that if you want first, but I want to show you some, and I want to show you a couple of things I noticed over the weekend.
Yes. Yes. All right.
So
We.
So first thing that I noticed on Friday is when the market made a new low, notice the VIX is well off its highs. And this is
Mhm.
the first time we've seen this. In fact, the VIX was weaker all day versus the markets. The markets were trending down. The VIX was trending down with it. That was something unusual. Now go to the IWM. And I like the IWM because often it's a bellwether and a leads
Mhm.
direction. Not that it's better, but look at the IWM here. What did it do on Friday? It
Higher.
failed to take out its low.
Yep. Yep.
So there's some divergences here going into Friday's close to me that are very, very interesting. Doesn't mean they're going to work, right? But to me, yeah, look at that. Nice look there.
Literally, just if I anchor the volume profile from this low, it's really interesting to just see how the price was able to literally go right through, that first level of volume, and then your next level before this next demand zone was this anchored VWAP from the March 2009 low, and you know It was a decent little bounce. You
Yeah.
got what 96 to almost 102. So, this is definitely another make or break, and it's really interesting, right? Because we were just looking at SPY and saying how much lower the price had to drop until we got here. Well, now IWM is here, so this is kind of the next one to look at to see. All right, does this hold or does this break down, and will that be something to look at, kind of for SPY to follow?
And that's it. And that's why I like looking at these things because, right, you see, maybe you get a hint. Maybe the market is starting to look to try to turn or maybe try to stabilize down here a little bit. The one thing that I worry about with the IWM, it's so heavily weighted by the regional banks. And these banks, with 0% interest rates, these banks are doomed, right? There's especially the little guys. The bigger guys, they have other things going for them. And their exposure to the shale industry is another problem. And then let's just talk about all the small energy stocks in the IWM. So you have a couple things that are really hammering on this thing down here. But at the same time, they have all these small biotech stocks that they say the word corona and they and they go up 80, 100, 200, 300%.
Oh, crazy. Have you been playing any of those?
Uh, I've played very little. I played TDOC a couple times, but these things are very dangerous. And I would point this out. A name like TDOC is now moving. I've seen this thing move $10 in 15 minutes. And if you get into it, you can get in a lot of trouble real fast if it goes against you. So my point is, you kind of have to, look at these candles and if you look at an intraday, if you went to like an intraday time frame, you'll see some of the wild moves on a 5-minute chart. So you got to keep your size down, but these things can fly. I think these things have all, yeah. Look at the size of some of these candles on this thing. I mean, it's just insane.
It reminds me of Zoom. I mean, this one and Zoom are really kind of moving together a little bit. Um, Even the same type of candle here. And what's interesting that I wanted to bring up, and oh my gosh, look at that. This is a 5 minute,
hmm
121 to 158 in 15 minutes.
Yeah, which one is that? I can't see. It's a little small. Zoom.
T-Doc.
T-Doc. Yeah. So that's your point. I played Zoom on Friday. I got in, I grabbed myself 1,000 shares of it, and I got stopped out like a couple minutes later up about 30, 40 cents, which I'll take, right? I'm upset. But I was actually up over a buck. It hit my stop at 78 cents, and I got filled 38 cents below my stop. And that just tells you how volatile things are. Before then, it turned around and ripped up $5 from there. So, it's tough. It's just tough because everything's wide and loose.
This is one of those cool examples using raindrops last week. The thing about Zoom is, as you were mentioning, it's just got these volatile moves. At the end of the day on March 19th, which was Thursday, we closed, I think, at like 125 or below. But you could see how much volume was actually holding above this resistance line. And so you could see there was a lot of conviction by these buyers. So when we kind of split the screen and do a hollow candle here, you'll see that, we didn't close above this, but you'll see that all of that volume is within the wick.
Yeah.
And so that is something that has really been useful here to kind of see if there really is strength behind whatever participant, whether that's the buyers, their sellers. You can even see on Friday, I mean, we closed at 130, but most of that volume was focused in the 133 area shown by the raindrop here.
Your raindrops are one of my favorite features I have. I love using those. Um, but one caution to everybody on Zoom would be this. Zoom is only one company. I mean, Cisco has the same technology, so does Microsoft and work, but Zoom is the one they're choosing to pile into.
Yep.
Be aware when they're done with this name is in for a world of hurt. So
Is this the 2020 Beyond Meat kind of ticker?
it's not that bad, but because I think they're first of all they're a profitable company, unlike a lot of the other IPOs. They're making money, they're doing well, and they're doing great here. But their technology is not alone. I love Zoom. I use it for my room, right? And I'll be the first to tell you, I think they're a great company and a great product. But you know, Cisco with their WebEx and their software, Microsoft has their stuff. Work with Slack, right? You know,
Mhm.
why aren't they piling into these names as well? Because they all do the same type of things, and it's just this is the chosen one. Put your fingers around and quote it, in the air for me.
Yeah.
But just be aware, this eventually is. going to come in. But yeah, I mean, until it does, you play it, but just always play with stops. And if I own this stock, I'd be trimming it here and getting less and less of it.
1 second. I think I need to send this code back over. Uh,
It's Uber.
let's see. So that is Zoom. What do you think about Baba? Because Baba is one of those that Amazon, Walmart, those have actually held pretty well. Baba is one that is a Chinese, online retailer essentially. Do you think they are kind of one of those laggards to that industry, or do you think that that's the whole market at this point is going to get hit at this, because I mean futures are down. Do you think this week's going to be liquidation where nothing's safe, or do you think there is still some safe plays for this week?
That's a tough question, Jake. That's a great question, but that's tough here. So first of all, I'll be the first to tell you, I think Bob is holding in better than most of the rest of the market. And if you believe China is turning, this is a name I'd keep an eye on. Its big problem is it's traded on the United States stock market, which is gets caught up in the liquidation that's currently going on here. So may not be. I like JD as well. JD is another name in the same space, right? The same online retailer in China that's also been holding in better. And again, if you believe that the China is turning the corner on this and is starting to get back to normal, then these are names you should be first to bounce as we come out of this.
I mean, it's still JD. This is JD's chart. I mean, we bottomed here at 32, but I mean, in December we were at 31. So this has really, for now, actually held relatively well, like you were saying. I mean, it will be interesting to see if these are some of the ones that lead the market higher, or what happens there. But one thing that I did want to mention as well is Tesla. Tesla is one that uh, that I essentially, sorry, unshare screen. Are we good?
Can't see the chart now.
Yeah, he can't see the chart though. But well,
I
Tesla.
pull it up. I got it on my screen.
One thing that I was gonna mention is Tesla's weekly candle here. So what we have is, if we anchor the volume by price from this area here. Yeah, well, let me get it. Pull it over and anchor it from this kind of bottom from what is that? Late May, early June of 2019. Notice that this wick literally hit right at this 349 kind of volume block. And so this is something that once again is kind of allowing us to visualize where these pockets of demand are holding, because what happens is when the price of Tesla was 800 to 900,
Almost
the
1,000.
almost 1,000, the average person was holding, from this chart you can see the majority of the volume was holding from the 200s. And so it just became very easy for the price to literally just crash back down to where there's at least some volume. And that demand zone is kind of where we had this very short consolidation before the next leg up. I wouldn't even I don't even know what you call that. It's kind of like a rising flag. But anyways, you kind of had this lip, and you just started the next round to the upside. But you can tell that was where the next kind of round of volume was holding, and that's exactly where these people broke even, stopped selling, and then they kind of added to that supply and demand inefficiency, causing the price to at least short term bounce from here.
I
Um,
mean, you talk about a V bounce. This is a V sell off, right? If you look at a daily chart, well, when have we seen a move up that fast and down that fast? Look, this is your Beyond Meat or your Turley, right? You look at this thing on a daily chart. Look at that move. I mean, it's almost. I mean, you look at that. There's symmetry, and they move up and down. I mean, it almost is exactly there on the daily chart. I honestly think this thing has a date with 300, because if you look at the weekly chart, it kind of did this whole consolidation period between 300 and this 350, It could even see lower than that. But this is where I sometimes throw technicals out and say, who's buying a Tesla right now?
Yep.
Who's making big purchases? Who's buying Teslas? Who are they going to deliver to? How can the earnings be good for the next 2 quarters? And
Yep.
Elon is, smart guy, but he's the biggest snake oil peddler out there in terms of what he'll do to pump it and what he'll say on Twitter, right? But I mean,
Yep.
what's he going to say here? Because nobody's buying cars, their factories are shutting down. The PR today is, oh, we're going to start making ventilators. Well, the companies that are making ventilators aren't going up. So why would GM or Tesla or Ford go up on that? Because they're not tooled to do it. So what are they really talking about? They're not going to make money on this.
Yep.
It's a PR play. I
Yeah.
think, to your point, it bounced right off that 350 area where it came into. But I don't see how this thing can hold here. I mean, long term, I think it'll come back. But I never thought it was worth $1,000. I thought this was ludicrous.
Yeah. I honestly thought, the madness would continue and this would just keep going up, but I was very wrong on that.
Well,
And
Ron Barn still has a price target of 2,500 on it, so you can go talk to Ron there.
that was mine. So, woo. Yeah, I mean, just from I think I was using fibs for that, but I mean, just from a gap perspective, this is a new indicator we have. It essentially just highlights all the different gaps. It's called the gap snake in the indicator list. But this is one that really catches my attention here because it's right around that 300 mark that you mentioned. And if you have enough liquidation or enough people that are forced to sell, you have these big wicks that end up filling gaps. And so it will be interesting to see if this is just a very short term dead cat bounce to resume the pretty much free fall that it's in right now.
The problem with this name too is the options are so jacked. Usually on
Yeah.
like a Friday on the option expiration day, you can play some cheap things on this thing. And now I did watch the weekly 500 call. Somebody bought them at 50 cents, and they went up huge. And then
Yeah.
they came in. There was an order of a bunch of them came in, and they were up over $3 at one point. But they were also playing almost $50 out of the money on a Friday expiration. But the out the money or somewhere in the area were still trading on Friday, like mid morning. They were still trading at 8, 9, $10. That's ludicrous. I mean, that's if these are options that expire in a couple hours, I don't want anything to do with something like that.
Yeah. No, thank you.
And
That
if
is
you're buying the 500, you're taking a true lotto.
what is the main thing you look at options if they're trading above? Are they trading above the theoretical value, or what do you gauging the premium as over, expensive or not?
So what I mean, from years of experience, when I look at a name right now like Apple, Apple's the IV right now is higher than when it has earnings. So it
Yeah.
tells you they're pricing in these moves that are big. So you're playing with jacked up premiums because this is now the new norm because of where the VIX is. And then you look at the spreads. So Apple's still relatively tight. A lot of times the spread is still around 5 cents or so. AMD is still tight. I was seeing on Boeing the other day $2 spreads. On Costco, $2 and $2.50 spreads. I mean, that's tough to play if you add in the jack. Because then if everything, if things are going against you, or even if it's going for you, it's tough to get in and out of these names. So, take your size down. I'm generally only trading a handful of options unless they're cheap. So I traded Apple a couple times and I was trading like 30 to 50 cents, and I would take 10 of those, right? Not a big problem on that. But on the Boeings, I was thinking I had five of those at $2 or so per, and I made like 30 cents on each of them, and I blew out of it, which was the right call. But then it ended up going lower. But it's really just a matter here of just saying I'm going to keep my risk down and make sure I don't hurt myself until I have a better chance. And you'll see the IV, and the thing to do is just start watching the IV and look at it versus historical. And you can go into places like Thinkorswim; they'll show you that. If you look at the historical IV, you'll see names like this. They're running 2, 3, 4, 5 times. I mean, Carnival Cruise usually has no implied volatility. It was running almost 300% the other day.
Wow.
I mean, this is insane. So if you buy that option, I mean, you're paying an incredibly jacked rate, and you got to ask yourself, do I want to play with that? And I don't short with stock. I know a lot of people like to use stock to short, but you go on as soon as you short with stock, you're on margin, which always puts you at risk. So I just don't do it. So if I short with options,
I love
puts.
it. Well, we are right at that 1 hour mark. That pretty much flew by. I really, really, really hope we can get you back on here because this was incredible information and just, something that a lot of people don't have the knowledge base for options. And it was just incredible to hear your input and just from your experiences. And we really appreciate you being on. And I think everybody listening does as well.
Jake, thank you. It's a pleasure being on here tonight, and anytime, man. Be happy to be back on.
Awesome. Well, everyone, if you do want to check out Trendspider, it is 30% off for up to 12 months. Ends tonight at midnight West Coast time. So you do have a little more time if you're on the East Coast. That's going to be what, 2 or 3 in the morning. But we will end it at midnight West Coast time. So make sure to get the 30% off for up to 12 months. This is a very quick deal. Website smartoptiontrading.com. Mike, any last words about your community, how they can get involved, that type of thing?
So, what I do is I do 2 videos a day. Morning setups, what talks about what I think of the market for that day moving forward. I do a daily recap at night, and throughout the day, I have a private Twitter feed called Options News. We have a room, very active room, where we're in. It's trades real time, looking at charts, calling out flow real time, but also having fun, and that's important in a day like the market like this. Is trying to make people laugh and just trying to relax when things are just what they are. There's times just not to trade. And I think that's what I try to help people realize, that sometimes intraday when it's so choppy, like on Friday for a while, it was just so chopped up, stay out of it. So if that's something that you like, check me out. Love to have you. I use Trendspider as well. I use, you know, most of it comes off option flow, and option flow is always a great indicator of sentiment in the stock and shows you where money may or may not be flowing. So love to have you guys. And most important thing I want to say to everybody is please be safe. Look out for yourselves. Look out for your loved ones. This too shall pass, but be patient.
Absolutely. And Mike, we were going to mention the scanner. We didn't get to it. What are some quick, simple scans that you're looking at into the mornings or even after market close?
So Transpire, if you didn't know how this new scanner they put in, one thing I love it for simple scans. So I'll take a scan of the SPY, the Qs, the 100, and just say, okay, show me any name right now above the 50-day, and the list is pretty small, but that's showing strength. And then show me any name above the 100-day, and then the 200-day. And the reason you do that is it just compares relative strength, and you're looking for relative strength versus the indexes for names you want to buy. And that helps me determine what names I may want to play long that day. And so, like Apple and Microsoft and AMD, obviously we talked about Zoom, right? These have all been names that I've been go to. One of the reasons I shorted Boeing this week is because it's been one of the weaker names in there. So it's, it wasn't afraid to jump on that for a short. So it's really about using that scanner for me to find what names are holding in better, or what names are weaker, and then use that to your advantage on a daily trading plan. And
Awesome.
that makes a huge difference.
Well, honestly, as much as I wanted to get to that, I think some of the stuff we talked about was just as important. So this gives us another reason to get you on soon and talk about the scanner and how you utilize that more and give people more of a visual. What we'll do is we will post probably some charts tonight with the scans so people can just get an idea of how that works because we weren't able to show it visually. But once again, we, sure. We are past time, so I didn't want to take too much time from everyone. But if there is a chart request or two, we'll go ahead and take it. Do we have any? I think I went through all of them. We got Boeing, Zoom, and Tesla. Those were the three. And we'll do some chart requests tonight. If there's time later tonight, I'll try to sneak some in. Some of the ones that I want to look at. I know Mike, you like Twitter, right?
I've loved Twitter. You know, long term, I think this name's still fine. I've owned it since 14. I've owned a lot of it. I've sold it. I have a couple hundred shares left. That the average price is now 27 because I've been in and out of this thing with thousands of shares over the last couple of years.
Mhm.
I think this thing bounces at some point, but right now in this market, it's just getting hammered because everything's getting hammered. But you look at this chart, and it's coming into that downtrend area where it kind of bounced off of there on Friday. But tough name.
Yeah, I mean, this is one that kind of baffles me because you know everyone's using Twitter right now. It seems, at least the FinTwit community, and
And
kind of
great earnings.
sorry.
And great earnings.
Yeah, and is it a liquidity event where someone just got a ton of Twitter and they're getting squeezed somewhere else and they have to sell this? That's one thing I wanted to mention too. I mean, I guess we're going to extend this a couple more minutes, might as well. Um, you know, I read a book. I'm not sure if you've read it, Mike, called The Quants.
Have
Um,
not.
it's a book about 2008, 2009, and it was a great book. One of the things that really kind of got my attention was when they started to talk about these companies that were getting sold off for kind of these liquidation reasons. So what happens is, there's a lot of stuff that may not make sense right now. It's like, oh, this store just sold out of this. Why is the price going down? Well, a lot of the time, some of the reason you see these big moves down in price isn't because it's a bad company. It's because somebody may be holding that as collateral in some type of margin trade they're in, and they may be forced to sell that. If there's not enough buyers in the market to absorb that, it's going to drop. It's not because it's a bad company. It's because somebody's holding so much of it that they're literally getting liquidated, and that's what they have to sell.
Look at Square. It's another one of my favorite companies.
Oh man, that thing has gotten annihilated.
All right. But so I did a every year I've been started to do now is names that I think can outperform, and Square was one of them. And it hit most of my targets. It didn't hit the last one.
That
And you
was
look at
a
that.
gap play, right? Wasn't
What's
that a
that?
gap? You initially played this one as a gap play, right? Didn't it fill the gap?
Yep. Filled that gap, went higher, went all the way up, had great earnings, good guidance, right? Did everything we were looking for and held in. When this market started to come in, this name held in for a good amount of time, right? And now it's capitulated. And I'm looking at this thinking to myself, remember, a year and a half ago, this thing was $100.
Hmm.
And this is a disruptor, and I love this name. And I keep looking at that 20 area because God, if it gets down there, I'm going in hand over fist on this thing because that's where it came out from. But one of the things, one of my subs brought this up, his name's Liang, and he had a great point. He said, they have so much exposure to small businesses that are getting killed here compared to PayPal, which has, all that online payment thing that they don't have.
Hmm.
Long term, I think they're great and I think they're really in good shape. But yeah, I think here this is somebody you just kind of have to look at and say, you got to be careful here, but I want this long term and I wouldn't be afraid. I almost dipped into this the other day in the 30s. And I said, wait. And the only reason I said wait because I think this market might still go lower. But, you know, if it came back to that 32, I'd probably start to buy some, not a full size position on it.
You got a little bit of that volume gap here. If it does start to move down, you don't really have a lot of really friction until that 25 area. But once you're there, this thing is retraced big time. I mean, from this to this, we're already way past. We're probably already at the 50% retracement.
Yep.
And I know you're not a big fib guy, but yeah, I mean, look at that. We're what is that? 0.5. Yeah, we're just absolutely. Let me change this to linear. Now, yeah, this is better. So yeah, I mean, we've just blasted through all of these fib levels like it's nothing, and you can see here the volume by price is kind of capturing that price action and not allowing it to drop. It's kind of like jumping into the Dead Sea. You can only go down so far if there's so much density in the water. I know that's a weird example, but it's kind of the only thing I can think of. But it's kind of like, there's so much volume holding here. It really prohibits price from dropping much lower because the supply and demand properties won't allow that unless you just have some type of mass liquidation that you know we're in unprecedented times. It can't happen. But yeah, this is definitely one that just absolutely went from almost 90 down to 33. That's just unreal. So I know Jack Dorsey's probably not happy. So he's what is he more involved in? Is it SQ or is it Twitter?
Uh, he really is Square as his baby. So if
Yeah,
push came to
I
shove,
don't
I
follow
believe
that.
he would sell Twitter and keep Square.
Really
Yep.
interesting. Yeah,
But I think I've said for a while he needs to get rid of one. Unfortunately, they just tried to push him out on Twitter, and he made a deal to stay on board with was it Elliot? It might have been Elliot. I think it was Elliot that bought $1 billion stake, and they're doing a $2 billion buyback in Twitter. But these are the companies you want to look at. Bring up crowd. I mean, as long as if you want to have a minute, bring up crowd. And this is what I want to show you. And this is why I look at these names. And it's just because you look at what just happened here on Friday and how this name held in and what it did. And you know, again, it has to for me, it has to get up higher. It has to get above 50 and then 54 to get going. But I look at this name and raise guidance here, that's something you want to keep your eyes on. Doesn't mean it can't go back down. And I really mean that. It doesn't mean it can't go all the way back down to that 30 area right now with this market. But you want to look for names that were strong earnings and raised guidance or held guidance into this event. These are the names that are likely to come out. And you want to look for names that are in a space that is not likely to be as affected. Cloud, cloud-based security, that's a good space to be in, right?
Yeah.
Companies still need that.
Yeah, no, and that's the thing is it's kind of like it's kind of just navigating through the markets trying to figure out what is still in demand, what is still going to have demand in a year if people still aren't going out. It's these software companies. There's, everything's going to get hit just from a lack of people going out more. Consumer spending is likely to just absolutely tank. So at least in the short term, but if things bounce back, it's really going to be quite an interesting move. And I'm glad we were able to get a couple of those charts in right there. So once again, everyone, 30% off up to 12 months. OM30 ends tonight. If you want to check out Mike's Twitter handle, he does have a public handle as well. It's Options Mike. And smartoptiontrading.com is his website. Mike, thank you so much for joining. I hope to get you on very soon again. This was great. And we'll talk more about that scanner. So once again, everyone, thank you so much. Mike, stay healthy out there. Everyone, stay safe. And really, let's be all socially responsible and just stay inside and not spread this thing.
Thanks, guys.